Hey fam, this is DB and today we'll talk about building a long-term spot portfolio that is well structured, resilient, and well aligned with market opportunities. Our framework includes 4 key steps, which are investing in blue chips, adding selective growth picks, diversifying across narratives, and applying smart allocation rules. We start with blue chips. These are usually long-term resilient assets like Bitcoin that form the core foundation of our portfolio. You can also include blue chip stocks like Nvidia, Amazon, or Google for broader exposure, but the idea is to anchor your portfolio with assets that show lower volatility and offer higher survivability during market downturns, corrections, or even bear markets. Next, we layer into growth picks, which are high quality L1 or infrastructure plays such as Solana or Sui. It is best to keep this focused. 2 to 3 plays allow for better tracking and more meaningful allocation. And most important, avoid over-diversifying into lagging projects that do not perform relative to the market. The third step is diversifying across narratives. Bull markets move in sectoral waves, so your portfolio should do too. Diversity across different narratives like L1, AI, DeFi, or real-world asset is very important, but be cautious and avoid going all in into short-term hype, such as the AI agent hype we had a few weeks ago, which was not sustainable. So try to focus on narratives that have proven to be strong either across cycles or throughout this current cycle. By spreading across different themes, you increase the chance that at least one sector in your portfolio is performing well at any given time. The last step is applying allocation rules. So you usually allocate more into blue chips and less into growth picks or low caps. For a more balanced portfolio, you can put 70% into blue chips, 30% of your capital into growth picks. And if you want to risk a bit more, you put 60% to blue chips, 30% to growth picks, and maybe 10% into low caps. Review and rebalance quarterly based on performance and macro signals, and avoid FOMO buying and stick to a structured approach. We usually cover key indexes in the crypto market like total market cap or USDT dominance to identify good times to buy and good times to sell so that we don't make the wrong decisions when it comes to spot investments. We can take a practical example where I allocated 65% to blue chips, 30% to growth picks, and 5% to risk assets or low caps. Not all the assets shown here is what I hold. I've been transparent about my holdings recently, but this is just as an example to understand how a well-balanced portfolio usually looks like. The highest allocation is to blue chips. In this case, we are assuming a 100k portfolio where we put 60k into Bitcoin, Nvidia, and Google. There's not one way of doing this correct. This is just one example. There are multiple ways of doing this, but this is just how I would structure it if I want to have a low-risk portfolio. Next, we put 30% into growth picks where we choose Solana, Sui, and Tao, 10k each. And lastly, 5% allocation to 2 on-chain projects or low caps that are riskier, which in this case are Desync and OXO with 2.5k each. Apart from the allocation, it is important to understand why you invest into a certain asset. You never should invest because somebody told you so. You should never invest based on sentiment or hype. You should always have a constructive reasoning on why you have put your capital into a specific asset. So just take a few examples. We buy Bitcoin because it is a trusted digital asset. It has gained institutional adoption and it has a finite supply that can serve as a store of value. We invest into Nvidia because it is the leader of the AI chip market. It is an infrastructure play for the future of AI and data centers. We invest into Sui because it is built by ex-Meta engineers and it has a strong network. Or we invest in Google because it is an AI, search, and cloud all-in-one. It has strong earnings and it is a key driver in digital infrastructure. Lastly, to summarize everything, there are 3 main elements that we need to pay attention to build a resilient portfolio, which are selection, narrative, and allocation. Build around with strong time-tested assets like BTC and tech leaders like Nvidia or Google. Ensure exposure to evolving market sectors, but avoid overcommitting to short-term hype. And lastly, don't hold too many assets. Aim for the depth and conviction, not just breadth of holdings. If you have questions, you can find me on the fundamentals. Feel free to tag me. I hope this is helpful. Stay safe trading and take care, fam.